Welcome to another episode of Wilson Weekly on the Money Mentor podcast. I'm Rachael Howlett and I'm thrilled to be hosting this week. As you know, I am joined by the amazing Dr. Andrew Wilson, property economist with My Housing Market. He's here to break down the latest trends in housing, rents, building approvals, and everything you need to know about what's happening across the property landscape. Doc, it's always a pleasure. Welcome back. What do you have for us this week?
Well, thank you very much, Rachael. And here we are. Is it the middle of winter? No, it's not the middle. It's the beginning of winter, but it's the middle of the year. So I guess we're just in the last gasp of what we notionally call the autumn selling season, which goes through till the end of June. And then we move into the winter market, which gets very quiet because we're all starting to think about the spring selling season. Can you believe I've actually mentioned the spring selling season today? But, not too far away. But, of course, we've got to get through winter first. And I think it's a little chilly all up and down the eastern seaboard of Australia at the moment. Some sunshine once you get up north into the lovely sphere of Queensland. And I think it's sunny everywhere else. I'm not here to do the weather forecast. But we're just setting the scene because we are just about halfway through the year, a couple of weeks to go. This is the second week in June that we're reporting on. And that's what we do here, of course, Rachael. Every week we report on what's happening in the housing market and all the sort of key drivers behind it, because what we want to do is keep our listeners and viewers informed. And of course, if you are thinking about property, you want to be informed. Let's make an informed decision, right? And that's what we're here about, is to provide you with all the latest information and, putting together some commentary so you can make that informed decision, because it's a big decision when you're buying or selling property. And even if you're not in the mood currently or in the process currently of buying or selling property, everybody wants to know what's happening in the housing market, don't they? Exactly. Regardless. So we're here to provide you with that information. Of course, my brand is My Housing Market. We provide all our data in-house. We compete with the other data providers. So nothing here is tied and third-party type of insights. It's all coming from My Housing Market. And of course, we do it in conjunction with the good folks at Infinity. So you get all the best of all the worlds of finance and property market insights on the Wilson Weekly in conjunction with Infinity every week. So, and of course, our motto is current state and future prospects of housing markets. And that's important. That's why we come here every week, because things do change. And they can change quickly, particularly in regard to the economy. So we want to keep everybody informed with all the latest information. So let's get started, Rachael. We've got a very exciting week, the week to Wednesday, June the 4th. In fact, it's the week to June the 10th. So we've moved forward a week. And this week we're going to look at the latest home rent data. Hot off the press, May home rents. How's those rental markets? How are the rental markets, capital city rental markets, travelling? And we're also going to look at the April home building approvals. And it is very important to look at the building approval data, which we do on a month-to-month basis, because one of the key drivers of our housing market, Australia's housing market, is chronically undersupplied with housing. We have too many people, not enough houses in this country. We're not alone. The US, by and large, has the same problems. So does the UK, Western Europe. So we're not alone in not having enough houses and not building enough houses. So we like to see on a month-to-month basis whether we're starting to turn the corner in terms of new supply. But that's probably the biggest problem that Australia faces in terms of housing market balance. And it's one that's very difficult to adjust, because, of course, for all the goodwill and good wishes of the federal government, they don't build the houses, the private sector does, and it's more in line with what the states can do because they're in charge of land planning, the states. So, we've seen some movement in that. We will talk about that shortly in terms of initiatives from state governments, particularly New South Wales and Victoria, in regard particularly to higher density development. So we'll have a look to see how that's developing. And as usual, we will look at the latest weekly auction results. It's important to look at those weekly auction results, Rachael, because they give us a really reliable insight into what's happening generally in housing markets. So that's why, it's good to be able to look at that data on a week-to-week basis, because it is quite an accurate, provides us with quite accurate trend data in terms of what's happening in housing markets generally. And it's interesting because we've been looking for the last couple of months at some improved results from the Melbourne market, which has been a little bit under performing over the last couple of years. And now we're starting to see some really positive signs coming out of Melbourne in terms of an improvement in the its auction results. And hey, no surprise, we're now starting to see prices growth coming through in the Melbourne market as well. So, the notion that Melbourne was an opportunity market is, and we've been discussing that for some time, it's now starting to bear fruit, because reflecting on those auction clearance rates, we're starting to see higher prices. But we're not talking about house prices today. We are talking about home rental markets. And this is the May results for our capital city rental markets. And probably no surprise, we've seen a general tightening, quite a sharp tightening in rental markets over May compared to April. And that's because we've had a lot of seasonal ups and downs that have impacted our rental markets over the last few months. But May, of course, we haven't had the distractions, particularly had over April. Of course, April, as usual, was a significant holiday month, but even more so this year because we had a late Easter, which was early April. That was followed up by Anzac Day. And then, of course, at the end of the month, beginning of May, we had the federal election. So lots of distractions. And of course, what that means is people put off or postpone their property decisions, particularly tenants. And that means less demand, which meant higher vacancy rates through April. But now that the holiday distractions are behind us, we've seen a more fully focused market over May. And that has unsurprisingly led to more demand, which in an undersupplied housing market, which we've already spoken about, means lower vacancy rates, which will eventually mean higher rents. So, and that's with the lower vacancy rates, you get more competition amongst tenants or prospective tenants for properties. And that leads to higher rents. So let's have a look at the data, shall we, Rachel? I know it's exciting. Drum roll. Here we go. These are our capital city results over May. When we look at the rental changes, pretty flat. Rents were flat in Sydney, Melbourne, Brisbane and Perth over the month. So these are median asking rents on a weekly basis. So it's the asking rents out there that are advertised, and it's the median asking rent for each of the capital cities on a monthly basis. So it's steady in Sydney, Melbourne, Brisbane and Perth. The markets that have been picking up recently, some of the smaller markets, showed again some increased activity. Darwin up by 3.8%, 3.6%. And that Darwin market, not just for rents but for prices, has certainly started to rebound over the past 6 months. Hobart up 2.9%, similarly a strengthening market in Hobart. Adelaide up 1.6%, and Canberra up 1.4%. So generally higher or flat rents over May compared to April. When we look over the past year, we can see rental growth positive in every capital city except Sydney and Melbourne, which have been sort of flatlining over the past year, but from a high level, particularly Sydney, which still has the highest median asking rent, $800 a week in Sydney. So you've really got to find, some extra cash to be renting in Sydney compared to the other capital cities, particularly Hobart, which is the most affordable there at $581 a week median rent. But rents have increased the most over the past year in Adelaide, which, as we mentioned before, had quite a strong result over the month. But Adelaide house rents up by 5.8% over the year. Hobart up 5.7%, Canberra up 5.2%, and Perth up 4.5%. So look, some growth there in rents. Good news for landlords, not so good news for tenants over the past year. In most markets, however, Melbourne and Sydney have gone the other way marginally. Now, the important data here, Rachel, are the vacancy rates. And we can see there that over the month, vacancy rates fell in every capital city market. In fact, they're at very low numbers again now. As we when we discuss our rental markets and vacancy rates, we mention that 2%, around 2% is sort of the balance mark for vacancy rates. Anything above 2% usually means downward pressure on rents. Anything below 2% vacancy rate translates into upward pressure on rents. So certainly, given that benchmark, we are looking at clearly upward pressure on rents. Most vacancy rates are well below 2%. The highest there is actually Canberra at 1.5% vacancy rate. And a number of vacancy rates, in fact, half of the vacancy rates are below 1%, which is very low and just does reflect a shortage of rental properties where you do get below 1%, really below 2%, but certainly below 1% means there's plenty of people queuing up for available rental properties in those areas. So not really good news for tenants there, Rachel.
Yeah, sorry, I've got a question for you there just on that. With Adelaide and Brisbane both showing stability, but also with Adelaide increasing, what do you think is driving that sustained demand in those markets?
Well, it's the same old story, Rachel. There's just not enough homes for rent. And we're going, and it's, we'll look at the building approval data, the latest building approval data, and that tells the story. We are obviously having increased demand as people move into sort of household formation phase, they leave home or we get migration, and they need somewhere to live. And that's not just purchasing a property, it's obviously renting a property as well. And the point is, with our housing shortages that we have, we get big queues of people in all our capital cities with these vacancy rates at open for inspections for available properties. All you have to do is, any given weekend, particularly if you're in an inner city area, you can see queues of people lining up, and what they're doing is, that's right. What they're doing is inspecting vacant rental properties, particularly. And look, it's a very stressful time because you can only rent it out to one person. So one person, hits the jackpot, but all the rest have got to keep looking. But it depends on local factors, of course, the nature of supply locally. We've had a drop in migration over the past year. The federal government moved in and changed migration levels, particularly for international students, because the government was concerned of all this demand, particularly in the rental market. So it did ease and significantly ease the intake for international students. And I think that's had an effect because we have seen some levelling off in rental growth over the past year, as those figures show for houses. But now we're starting to see some upward growth again. And of course, we were seeing quite remarkable growth in rents over the past 2 years. So we had annual growth at one stage at the middle of last year, pushing over 20% in some of our markets. And you can't sustain that. People just aren't earning an extra 20% a year to be able to pay for rent. So they sort of hit those affordability barriers, and we have to wait for wages to start to catch up, even though it's still a really onerous task to secure a rental property. It's just that people don't have the extra money to bid up rents. But, going forward, of course, they are earning higher wages, and that means eventually that they will be paying higher rents in a market environment that is certainly short of rental properties. And not just, as you mentioned, in Adelaide particularly, but also in all the capital cities, really. And as I said, the highest vacancy rate there is in Canberra at 1.5%, which is a low rate. But all the other capitals, and half of them are below 1%. And really, there's no change in this over the past couple of years. So we haven't seen supply coming through at a rate which would start to offer more choices for tenants out there. They're still restricted going forward. So that's our house market. Let's have a look at units. How units performed over the month. Same story, particularly flat rents in Sydney and Melbourne. Unit rents were higher in Adelaide. Mentioning Adelaide, and really, as you mentioned, Rachel, some real signs there of a particular tightening in that Adelaide rental market, up by 3.8%. Rents for units in Adelaide over the month, up by 2.6% in Canberra, up by 2.7% in Perth. Unit rents were down in Hobart and Darwin. moving the other way compared to houses. Hobart has a very small unit market, so that can tend to be volatile from month to month. But nonetheless, it's interesting that when we look over the past year, unit rents have actually increased in most capitals at a higher rate than houses. The leading performer there is Adelaide, up by 11.1% unit rents in Adelaide. Melbourne unit rents, another sign of a revival in that Melbourne market. Melbourne unit rents up by 7.3% over the year. Hobart up 9.2% despite that fall over the month. Canberra 4.9% higher, 5.3% higher in Darwin. So unit rents have actually performed better over the past year than houses generally. And only Sydney, which remains, of course, the most, like with houses, the most expensive capital city to rent a unit, median asking rent over May of $750. And again, Hobart the most affordable with a median asking rent of $491 a week. But again, all capital cities recorded lower vacancy rates over the month of May for units compared to what they saw in April. And again, that's a reflection of the end of those holiday distractions, more demand coming through in May compared to April. And vacancy rates a little bit higher compared to houses, but still all below 2%, as we said, which is sort of the mid-range point. But still, we have most of them in the mid 1% or lower going forward, and Melbourne there at the highest at 1.9%. But Melbourne, the Melbourne vacancy rate is actually now well below where it was a year ago when it was pushing up towards 3%. So I think that's showing a reversal in the restriction on international students coming in now to Australia, and of course that puts a lot of pressure, particularly on the rental market. So that's the story. Rental market's tightening. I'm sorry, no good news there for tenants. You're still going to have to queue up for a rental property. You're still going to have to make, I guess, compromises for where you rent and how much you pay and what sort of a property you're renting out there. But I guess at the other end of that is it's good news for landlords because they'll have plenty of choices for who's going to secure their property. And certainly with these very low vacancy rates continuing, it will mean over time higher rents. So again, as usual, Rachael, a good news, bad story for the rental market. And as I said, we've had some better news for tenants over the past year, particularly from the middle of last year. We saw rents starting to stabilise and really haven't gone far in most of the capital cities over the past year. Certainly not at those 20% plus growth rates that we had through 2023 and into 2024. But I think not that we'll get to those levels again. I think that we certainly have upward pressure on house and unit rents with these very low vacancy rates going forward. If you want a copy of the latest My Housing Market rent report, you can scan that QR code if you can see it on your screen, and that will give you a link to a PDF copy of the latest rent report. So we've covered rents. It's once again a story of supply. Do we have enough supply in this country? Well, let's find out with the latest home building approval data. And this is the data over April. Down again, overall home building approval, so that's houses and units, fell by 5.8% over April, following a 9.1% March fall. Again, it was units that were really the culprit in terms of pushing the overall numbers down. Unit building approvals are quite volatile from month to month because you can get a large development coming through 1 month, and of course it's not followed up the next month, so it's sort of a bit of a roller coaster. We'll look at the trend in a minute to fully reveal that. Houses were up, however, by 3.1%. Western Australia was the top state for building approvals over the month, up by 9.6%. But the big picture is that annual growth levels still remain depressed, and unfortunately we were starting to see a little bit of hope in terms of the trend for building approvals, for home building approvals starting to rise, but it's starting to go backwards again, Rachael. So
I was going to ask that, Doc, if there was any glimmer of hope for to try to keep up with that demand that we have for housing.
Yeah, look, that's a great question, Rachel, and this is what we try to do here. And in fact, we were starting to see an improvement, particularly from houses. We saw strengthening of house building approvals over the past year or so, but that started to flatten off. Now, what we're seeing now is actually a strengthening in unit building approvals. We'll have a look at the data in a minute, which is good news because, as I said at the very beginning of the show, we're certainly seeing a lot of increased activity from state governments trying to get planning approvals through, particularly for higher density units. But the problem is, Rachel, we're getting these approvals coming through, but it takes like 3 years for these approvals to actually become places we can live in. And by that time, of course, you've got demand that's caught up. So do you ever get to the point where you're balancing supply and demand? Well, with continuing increase in demand, particularly from migration, which will continue, it's problematic whether you ever get to the point where supply and demand are starting to match. So therefore, as with our rent report, you're constantly seeing upward pressure on rents and prices as well, of course. So let's have a look at some of those trends. Firstly, we'll look at the actual figures. And I think it's interesting. We can see there the monthly figures. Units down 19%, overall down by 5.8%. It was the unit results that dragged the overall home building approvals numbers down. Houses actually up by 3.1%. But this is the interesting point when we look at over the past year and the year to date. Over the year to date, that's the year to April versus the same period last year, unit approvals are actually up 44.4%. So we've seen a real surge in building approvals for units. As I mentioned, however, it does take some time for those approvals to become completions and therefore ready to live in. And over the full year, that's the year to April versus the same year or the same period the year before, unit approvals up by 12.7%. Houses still up by 7.7%, but the trend for that is starting to ease, as we'll show you. So overall, that's the long-term trend or the longer-term trend for national home building approvals. You can just see there it's starting to fall away after rising, and the number of approvals over the month is now fallen below where it was a year ago in April. Sorry, it's higher than a year ago, April, but the trend is starting to fall away. So that sort of answers your question a little bit. We're still on the sort of upswing, but it will depend going forward on the results that we do get. But we were seeing that trend start to rise, but it's now falling away again. So let's have a look at our capital cities performance. Melbourne, as usual, the top performer for building approvals for homes. But what's interesting now is Sydney's starting to catch up on Melbourne, and it's really on the back of a surge in unit development, and that's been a big change in the Sydney building approval profile. This year has been a lot of approvals coming through for apartments in Sydney, starting to catch up with Melbourne. House building approvals are still quite strong in Perth. You can see there that it's number 3 there in terms of capital city house building approvals. It was number 2 for a while, but now house building approvals have picked up in Sydney. But same old story in terms of Melbourne leading in the house building approval numbers, and that's this year to date, the number so far over the first 4 months of the year. So, but some interesting trends there, particularly with, you can see the increase in, or the strength of unit approvals outpacing clearly houses in Melbourne and very close to what's happening to houses in Sydney. And when we look at the picture over this year to date versus the same last year, we look at the change. So you can see how unit building approvals have changed significantly or increased significantly over the first 4 months of this year compared to the same period last year. And as I said, that's a result of, particularly in Sydney and Melbourne, of some very proactive planning initiatives from governments, from the state governments there, which have really, decided that they need to address the shortage of housing. And the way they do that, obviously, is to expedite planning approvals, particularly in inner city suburban areas. And Adelaide up quite strongly, but coming from a lower base than Melbourne and Sydney, but still a significant increase there, but increases everywhere. But what's interesting there is to see that Brisbane actually is approving fewer homes over the first 4 months of this year compared to the same period last year, down by 0.8%. So, that Brisbane market remains strong, and with now starting declining the number of houses being approved for building, not good news there. Well, good news there for homeowners in Brisbane, because it'll mean higher prices, but it'll also mean higher rents for tenants there. So that's our long-term trend for capital city. You can see there the big fall that we've had since the peak of our building approval data. Home building approvals still down 30% since the 2016 trend. This is capital city, so it's a big fall, starting to pick up again. But as I mentioned, you can just start to see a tapering of that trend. And when we look at units versus houses for capital cities over the longer term, you can see really it's units, which are the background chart there in the beige colour, well down, in fact, 49% lower than the peak back in 2016. So that shows you the whole nature of the fact that we've stopped building, and the cessation of strong building, particularly for units, over the past nearly 10 years has resulted in, this undersupply that we have, shortage of housing that we have. So that data shows it all. And it's interesting when we look at the black series there, which are houses, you can just see that starting to flatten off a bit, the house building approval trend. So an improvement in units from a low base though, but starting to see a decline in the growth of houses going forward. So we await to see how that pans out. So let's have a look, Rachel, at the latest weekly auction results. As I said, that gives us a great insight into what's happening generally in the housing market. So, of course, most of Australia had a long weekend, last weekend holiday for the King's birthday. Queensland was the exception. So there was a bit of a distraction over the week, even though the King's birthday was on the Monday. What it meant was usually the busiest day of the week for auctions is Saturday, but there was a distraction over Saturday because it was a long weekend. So a lot of agents and vendors avoid the long weekend holiday in terms of putting their properties up for sale under the hammer. So we get significantly fewer properties offered. Now, the week before, of course, we had a lot of auctions going forward with those that were avoiding that long weekend distraction. But despite the distractions, lower auction numbers, we still had another positive week for auction results generally in terms of clearance rates. And again, Melbourne recorded the highest clearance rate of all the capitals over the past week. So this is another part of that Melbourne story, Rachel. Another week, and I think it's been 6 out of the past 8 weeks, Melbourne has been the strongest weekend auction or weekly auction market of the capitals in terms of clearance rates. And Melbourne also has the highest number of auctions typically of all the capital cities. So again, we know prices are starting to rise in Melbourne, and it is part of that revival of the Melbourne market, and we can see it in the auction markets driving that, and that's why we bring that to you every week. Of course, now we're free of holiday distractions all the way through till, who knows, when's our next holiday coming up? Well, it's not until September, I think, but yeah. That's right. Yeah. And all the grand finals, but until then, of course, our markets the next few weeks will certainly be free from distractions. Then we have the winter close down, which starts really at the beginning of July in most markets. Queensland, Brisbane market doesn't have a winter market per se, but certainly the southern capitals all go into hibernation to some degree, particularly in the sales market over July and into August. And then we start seeing a revival in activity in the middle and later part of August, and that's the beginning of the spring selling season. So the next couple of weeks are still important. You still have plenty of buying and selling going on in our auction markets as the overhang of the notional autumn selling season continues, the end part of it. And of course, we have school holidays coming up in a couple of weeks, and that's really the beginning of that winter market. So let's have a look at the numbers, Rachel, just quickly. Numbers were down over the week, given the weekend holiday market. Sydney 666 auctions, well down on the previous week. Not a bad result there for the weekend for the holiday market, 71.8% in Sydney, lower than the week before, and around about where it was the same weekend or the same week last year. Melbourne, had a third of the auctions that it had the week before. Melbourne loves a holiday, and 519 auctions, but again, a very solid clearance rate there for Melbourne, higher than the week before and well ahead. And I think this is the really instructive comparison. Melbourne is well ahead of where it was a year ago, significantly higher than where it was a year ago, which is really a strong reflection of the improvement in that Melbourne market.
Which is great. Sorry, Doc, I was just going to say, it's great to see Melbourne bouncing back so strongly. I know you've mentioned it a couple of times. Yeah. Do you think this momentum can set the tone for the Melbourne market longer term? Sorry.
Absolutely, Rachael. And this is the point. I think the Melbourne market really has suffered mainly from a lack of confidence. Of course, it was battered and bruised coming out of COVID, severe lockdowns. And it really hasn't taken up the levels of activity that the other capital cities have had, the major capitals particularly, since we moved through that lower interest or that higher interest rate period in 2023. And the markets really have responded quite strongly over the past 2 years to increased demand and restored confidence, except Melbourne. And there's no other reason, because the Melbourne economy still remains quite robust. It's just really, you have to put it down to confidence, but once confidence is restored, people start thinking, well, I've put off my buying and selling decisions, for the last couple of years. I've missed out, and maybe I should start thinking about reactivating those property decisions, because they can see prices starting to rise. Look, there's still some way to go, but there's no doubt that the Melbourne market is shifting upwards. And that's the point, because other markets have grown, reasonably strongly over the past couple of years, and Melbourne's sort of stayed where it was. That Melbourne market offers a lot of value, and it's an opportunist market per se. And, yields are higher because prices are lower, but as we've seen, rents have been rising. So that means yields have been rising as well. So that offers a good financial incentive for investors. And we're seeing that with more investors, as we've seen with that latest home loan data, moving into the Melbourne market. So look, these are all positive signs. The auction clearance rate tells you that nearly 3/4 of properties that are put under the hammer every week are being sold in Melbourne. So that means, that's a seller's market at those sort of levels. So it means that if you are thinking of purchasing a property in Melbourne under the hammer, you likely won't be on your own when you go to the auction. There'll be others that are bidding against you. And that, of course, means upward pressure on prices. So, we're not just sort of wishing and hoping and praying here. It's definitely all reflected by the data going forward. And, we saw that in the latest house price data that we reported on last week. Brisbane, same old over the week. Of course, Brisbane didn't have the King's birthday holiday. They have that later in the year. So it was a very similar result compared to the previous week in Brisbane. Brisbane's tracking lower than where it was a year ago, but the Brisbane market was very strong a year ago, and it was atypical because Brisbane usually has mid to high 40s clearance rates. Anything over 50% is a very strong market in Brisbane. It has a different auction culture to the other capitals, but just holding its own at the moment in levels that we typically expect from Brisbane. And as we've seen with the latest house price report, prices still rising in Brisbane. Adelaide's, however, gone the other way. It's a weakening market. Adelaide was the strongest auction market a year ago. It's now certainly a lot better for buyers in Adelaide than it was for sellers, or was for sellers a year ago. You can see the latest clearance rate there, 59.3% in Adelaide. which is well down from the 74.1% a year ago. And a year ago, Adelaide was the strongest auction market, strongest housing market in Australia overall. Canberra, hey, is Canberra market up and about as well? We're starting to see a much more consistent rise in auction clearance rate, weekly auction clearance rate in that Canberra market. Good result there for Canberra, with good numbers of auctions too, 70 auctions and nearly a 70% clearance rate in Canberra. We haven't seen that for quite some time. And even though a year ago it had a higher clearance rate, so that's the sort of exception that proves the rule, we are starting to see a lot more consistency in Canberra. But I don't think we trust that market yet to be reviving. So we'll wait and see what the next few weeks brings us in that Canberra market. But again, similar to Melbourne, it is an opportunist market that has really been treading water for the last couple of years in terms of activity. So this is the long-term trends. Sydney, this is the monthly auction clearance rates. It's been very consistently in the 70s so far this year. Sydney, well above where it was to finish the year and around about where it was a year ago. So still positive, still a seller's market quite clearly there in Sydney. Look at Melbourne. This is the big shift that we can see, except for the holiday month, April, which was a very quiet month for auction activity in Melbourne. Not surprising in April, but since then, the Melbourne market has really picked up and it's significantly higher than where it was a year ago and also where it finished the year last year. So those numbers certainly reflect a rising Melbourne market. Brisbane, a little bit lower than a year ago. As I mentioned, that was a very strong period in the Brisbane market a year ago. And on the rise so far over June, over the past few months, the Brisbane market. Adelaide going the other way, falling compared to where it was a year ago and at the end of last year. So that Adelaide market starting to work its way downwards after a very strong period of growth. But of course, we do have yet to experience in our markets the impact of the May interest rate cut, and that will certainly bring more buyers out into the marketplace. And Canberra, as we said, maybe teasing a little bit. Let's keep an eye on Canberra to see if it can maintain its growth over the last month or two in terms of clearance rates, because it too is looking for a revival following a lengthy period of subdued activity. If you're looking for the latest auction data, you can get it on my LinkedIn site, Doc Andrew Wilson at LinkedIn, every Saturday night at 6 o'clock for the snapshot results, or on Sundays you can also access the full national report, which includes the regional breakdowns for Melbourne and Sydney and the top 10 sales under the hammer over the week for each of the capitals. So if you've missed that latest national weekly auction market report, there is a QR code. You can scan that and it will give you a PDF copy to the latest weekly auction report. And we're going to finish off now, Rachel. We've gone on a bit today. Been a lot to talk about, of course, building approvals and the rental market. We've got a lot to discuss there. So my voice is just about to go, but we've got enough left for the big giveaway for all our wonderful loyal viewers and listeners, and that's the My Housing Market Suburb Data app, brought to you in conjunction with the good folks at Infinity. And this is all you need really to be looking at what's happening in real time in the housing market. And it's a giveaway. However, there is no such thing as a free lunch. There is access to that app, which is a fantastic app, as you'll see with the screenshot in a minute. But you need to get a password from Infinity. Infinity will provide you with a password to the app, which you can get through that link or through the QR code there, which you can scan. So get hold of that, because it does give you insights in real time into what's happening in every suburb in Australia that has data. So if you're looking or interested in a particular suburb or just what's happening in your suburb and you want to get an idea of what asking prices are, this will tell you the asking prices for all the suburbs in Australia that have data. So this is what agents are currently pitching to the market. This is what owners think or are looking to sell their properties for. So you can filter. This is a screenshot of the app. You can filter it for price or rent. You can filter it for the state, capital city region, or the outside capital city region. We filtered this for Blacktown in Sydney's capital city region. You can filter it for house unit or townhouse, and also for the number of beds. How good is that? So you can really drill down to the specifics of a property. And it not just only gives you the median asking price, so it's what the market's asking right at the moment. It also gives you the high and the low. So you can see, where you're situated, the low price in the market, the high price in the market, and the median price in the market. So it gives you a great guide to what price, what they're asking for properties in your suburb or in the suburb that you're interested in. And it also tells you the number of properties that are for sale at the moment. So what a great little insight. And I know a lot of our viewers and listeners access this, and it's just very handy to have on your phone or on your computer, because you can, and we update this all the time. So it's a sort of a real, current time insight into markets. And you do exactly the same for the rental market, same sort of filters. And here for Blacktown, we've got a median rent of $750 a week, a low of $560 and a high of $680. So, and there are just 8 properties for 4-bedroom houses for rent in Blacktown at the moment. So get a hold of that one, Rachel. Get a hold of that one, everybody. It's something that you can use all the time to give you a feel for what's happening on a capital city basis in housing markets. And of course, we discuss here capital cities. Sorry, I said capital city. On a suburb basis, we discuss here capital cities, but this actually allows you to drill right down to the suburb level, and not just to the suburb level, but also filter it for the type of property and the number of beds. So just before my voice leaves me, we've also got an add-on for investors for the app. And this is on a suburb basis, will give you the top 10 yields. So this is the annual return of the current asking rents based on the current asking price for every suburb. And we've ranked it from high to low in terms of the top 10. So you can see what sort of returns you get there. And it's not just the yields that are displayed here. It's also the vacancy rate, the number of properties for rent, and the number of properties for sale. So this is a great little toolkit for investors or those that are looking to sort of return on properties as an investment class. And it means you can take a scientific approach, or more of a scientific approach, to your analytics in terms of the housing market, particularly if you're an investor. So next week we're going to have a look, which is always interesting, how the major regions are going for house prices. So let's have a look at how the major regions are acting. We'll look at all the states' major regions, the top local government areas, and see how their prices are, what's happening with their prices and their prices growth. Latest house building costs, of course, that's been interesting for a while. Latest house building costs, because we did see building costs go through the roof a couple of years ago. They have started to ease, but is that continuing? House building costs easing, and as usual, the latest weekly auction results. So if you've missed anything today, Rachael, there is a QR code where you can get the full report there as a PDF file. So I look forward, as usual, to chatting with you next week as we move through the winter market. And it's all very exciting, I know, but we're here, as usual, to bring you all the latest news, as we said, so you can make an informed decision in regard to your property moves, and also that you can understand what's happening in the housing market in a more rational and evidence-based way. How's that? All right, Rachael?
Absolutely. And that app is incredible. I know a lot of our Infinity family members use it and rave about it, and everybody on our masterclasses want a piece of it too. So it is awesome, and thank you for that. So
thank you,
that
Rachael.
does bring us to, thank you, Doc. That does bring us to the end of this week's episode of Wilson Weekly on the Money Mentor podcast. A huge thank you again to you, Doc, for joining us and sharing such valuable insights into Australia's property and finance markets. Look forward to next week.
My absolute pleasure. And yes, I'll see you then.